Okay, I think we're about ready to get started, everybody. Good morning and welcome to our webinar on lease accounting. Our goal today is going to be to talk about some of the lessons that have been learned by us and our clients who have successfully navigated their lease accounting compliance projects. My name is Denise Hinkle and I'll be your host today. My background is a combination of accounting and commercial real estate. I'm an inactive CPA and have worked in commercial real estate and commercial real estate accounting for many years. My career has really spanned most angles of commercial real estate, from the owner developer side of this business to property management. I've been on the service provider side and also done tenant work as well. The format of today's presentation is intended to be very conversational, and we welcome your questions. If you'd like to submit questions along the way, please send them using the Q&A button that appears in the control screen of the webinar hosting program. We'll have a specific question session at the end of our presentation. And if we can't or are not able to get to your question, feel free to send an email to us at events@scribcoreglobal.com, and we will send you a follow-up email and make sure that your question is addressed. So moving on, let's go to the next slide here. Really, what we have learned is that with this new lease accounting standard, for companies reporting under generally accepted accounting principles, the days of the simple straight line calculation are over. There's a huge effort underway to adopt and maintain accounting calculations per a new accounting standard, and we'll go into what that means. And it applies really to domestic, international, and governmental entities. All lease assets are covered under this new standard, whether they're real estate, equipment, or other assets that are included and wrapped in part of a larger service agreement. And lease accounting itself, this standard has really reshaped the role of lease administration, which is requiring staff or lease administrators to have new skills. There's new processes, and there needs to be new collaboration amongst various functions within an organization in order to generate these calculations and maintain compliance along the way. So as I indicated before, our focus today is going to be to discuss some of these lessons that we've seen by our clients who have successfully adopted. And for those of you that haven't yet adopted, the takeaways from those lessons are really going to be your keys to success as you go through this process. So what I'd really like to do, the first poll that I'd really like to see is get an idea from our audience whether your company is public or if your company is private. If you could just vote on the buttons, and I'll just continue here and we'll revisit the poll in just a minute. Let me tell you a little bit about ScribCore. How do we get here? Well, ScribCore, we've supported our clients through their adoption projects in several different areas. We've been involved in projects that assist our clients in selecting software to support their calculations. We've done lease abstraction projects anywhere from 25 to more than 2,500 leases along the way. We've helped our clients develop process and procedures that utilize this new software, as well as to try to centralize and globalize their overall efforts. We'll get into that a little bit later. But that's really a very difficult and time-consuming process, especially for our international clients. And then we've also provided, and we continue to provide, full-service lease administration. Our clients are really large and small, domestic and global, and they come from many different industries, from manufacturing to retail to office and professional services. We deal with leased and owned portfolios and leased assets of all types. Because of the advent of this new accounting standard, we've really started to do lease administration for equipment lease accounting too, which prior to this is really a little bit unheard of. So that's kind of new. So before we get into the lessons learned, let's talk about how we got here. Let's start with a little bit of a history lesson. So there was an effort that began in 2006 that was a joint project between two accounting standards boards. The Financial Accounting Standard Board, which oversees accounting rules and guidance in the United States, and the International Accounting Standards Board, which really oversees accounting rules across the globe outside of our domestic situation. And they started this project really almost 14 years ago. The goal that they had in putting together and looking at lease accounting was to evaluate and try to create additional transparency into the true obligations of both lessors and lessees. Previously, under the old standard, information was really buried in the footnotes and where nobody really looked. I mean, who flips to page 200 of a 10K? And it really was located, that financial data was located in one general rent expense line on the P&L when it came to operating leases. And what the accounting boards had said, and the decision that they came to, is that there are huge financial liabilities with regards to leased assets. And those financial liabilities really were unrecorded and were not appearing on companies' balance sheets, which, if you think about it, if you sign a lease for 5 years, you're obligated to pay your landlord rent for 5 years. But under the previous standard, that obligation was not reflected as a liability similar to a mortgage, some kind of a note payable or other arrangement where you would have to make payments over time. The second thing that they were trying to do was try to align both standards that existed in the United States and internationally. And I will say at the end of the day, they got about 98% of the way there. There are some significant differences between the two standards, but 98% of it is the same. We're not really going to go into the international standard too much today, and I'm not going to get super technical on the US standard either, but if you have specific questions, I'm happy to address them, or I would encourage you to check in with your auditors and accountants. So at the end of the day, there was a new accounting standard that they came up with, which is titled ASC 842 on the domestic side. That's the FASB standard, and it's called IFRS or IFRS 16 on the international side of things. And what this standard does is it calculates both right-of-use assets and lease liabilities, and the results of those calculations appear as assets and liabilities on companies' balance sheets. It's not a simple calculation as it was before. Before, in order to get into your rent expense, you would just total up your total rent payments, divide by your lease term, and that became the annual number for rent expense. This new calculation takes into effect the likelihood of certain events that may happen in a lease, such as options. It imputes an interest expense, so there is a present value type calculation that happens. And there are some other things that specifically go into this new calculation that makes it a little bit challenging for organizations to actually come up with what the right number is. So where are we at today? So where we're at today is that public companies adopted early in 2019, effective with really their first quarter reporting period. So the actual guidance was for fiscal years beginning after December 15th, 2018. That was the compliance date, but pretty much everybody is looking at Jan 1, 2019 as really the effective begin date of this. And private companies and not-for-profits got a reprieve, and they are now due to comply with their first reporting period in 2021. And it really remains to be seen, I think, at this point as to how many private or not-for-profit companies are going to adopt, given the cost and the effort required to do so. And you have to take a look at what's really going to drive them to adopt and go through this huge process. They're not openly trading on an exchange, so the SEC is not really going to require them to comply. And you really have to kind of consider, will it be their lending agreements? Will it be investment agreements? Or what other arrangements that are going to require GAAP financial statements? So getting back to this poll, where we're at on the poll is that if I'm looking at the responses here, and it looks like 88% of the attendees of today's webinar are from public companies, and we have 13% of our attendees that are from private companies. So for those of you that come from a public company, if you have any additional input or feedback, or things that you'd like to share, submit them through the Q&A and we'll try to get to them at the end of the presentation. And for those of you with the private companies, like I said, pay close attention because this is really going to help you as you go through this process. Here's the results. Okay, so let's talk about the effects of this delay for private companies and not-for-profits for a second. I think what this has really done is it gives this false sense that there is a lot of extra time. Really, there isn't a lot of extra time, and I think those that have dealt with this from the public company perspective will agree that this has taken way more time and expense, I think, than anybody anticipated. I think we're also likely to see a last-minute scramble, especially for talent. In particular, I think, abstracting all of your leases, finding all your lease documents, implementing a system selection, and some of the other things that may need to happen in your organization is going to create a huge scramble at the last minute, which is what we also saw in the end of 2018 with public companies that are trying to go through this process. I touched a little bit, I mentioned the shortage of qualified talent and knowledge. Similar to what we saw with public company adoption, there are only so many people that are qualified to help you with this if you can't staff and fulfill your needs internally. There are only so many accountants, there are only so many consultants, there are only so many software providers. And if you happen to be in a position where you need one or multiple of those disciplines, you're going to be competing with all other private companies that are trying to accommodate the same date. And then I think you need to also consider the number of private companies versus the number of public companies. It's somewhere around 10 to 1, the number of privates to the number of publics. So if you figure 10%-ish, we'll say, about 10% of the total number of companies that have implemented, that leaves the remaining 90% potentially that are going to need to go through some sort of lease accounting adoption process. The other thing to think about is that if you're with a private company and you're going through this, is that in our experience, in many cases, private companies can be somewhat less organized than their larger publicly traded counterparts. They have less resources, they may have less staffing, they may have just less guidance and less ability to make quick decisions on the fly as they go through this process. And I think the combination of all of that potentially could be, driving what we'll see in 2020. Now I want to start to get into the lessons learned. And really the primary lesson, or the first lesson here, is that implementation is expensive. And expensive goes beyond the monetary cost. There are investments that may need to be made in many different areas to accommodate this lease accounting change. The first one to take a look at would be your IT systems. I would put out there and recommend that if you have more than a handful of assets, really having some sort of system that can generate these calculations is going to be highly beneficial for you. I think the time that you're going to be taking to do these calculations via Excel is going to wind up being large. And I think that really you should try to leverage some software to the extent you can to get the calculations prepared themselves. And if you need an IT system, you need to consider the time it's going to take to source a system, negotiate the contract, and actually go through an implementation process of these systems. Many of these systems are highly customizable, and it's not an off-the-shelf package that you can just load into your server, set up a bunch of users, and hit the go button. There is some setup and some background work that needs to be done in order to get this to work for you, which affects the second bullet on this slide, which is the time. Everybody that we've talked to says that the project time required to adopt ASC 842 has greatly exceeded their expectation. Additional time for software implementation, additional time for finding documents, additional time for things that don't go according to plan has played into the overall project plan and timeline. And then the third thing that I think is affecting everybody and affecting the expense of doing this is the talent needed in order to successfully adopt and maintain these calculations. It is a accounting issue, no doubt, that affects pretty much every function within an organization because there are leased assets everywhere. Everything from bricks and sticks buildings, leased offices, to HR could be involved because there could be company vehicles, there could be corporate housing, there could be distribution. If you have some kind of a manufacturing facility, there may be dedicated trailers that are used to transfer finished goods from the end of a manufacturing line to some sort of a warehouse. Those types of arrangements all need to be captured. And it takes a multifunctional team that has experience and that has knowledge within and throughout an organization in order to be able to capture all of those leased assets and their associated documents. Each function also needs some sort of education because when you're dealing with HR, you could be dealing with marketing and advertising to the extent that you're leasing billboards and all these different functions. We need to understand that these people are not necessarily accountants, and accounting is not their primary skill set. So there also needs to be someone that is good at communicating what the requirements are in English to meet the people within our organizations where they are at. So to be able to explain what is a lease. We've done presentations with some of our clients to help educate their field personnel as far as what we're looking for. What is a lease? What kind of documentation is required? Should they submit it? Why we really don't want to see a lot of duplicates? Why this is important? And that goes into that talent bucket. And that really closely aligns with the effort that's required in order to successfully navigate everything that needs to happen. Effort in that finding leases and assets isn't necessarily a very easy process. For example, public companies, they'll have some sort of a work paper in the accountant or the auditor's book that will have some sort of a leased asset listing because it's something that they test for during an audit. Imagine if you are a multifunctional, dispersed, decentralized organization that's operating globally, and you have to find leases for all of your copiers around the world. The effort that's required to actually locate these documents, and you have to work from the documents in order to create the calculations, is huge. Because we've seen situations where it could be somebody sitting in a field office that needed a copy machine, didn't want to go through procurement, rents or leases a copy machine, puts it on his expense report, and sends it through. What are the processes and procedures in place in capturing that leased asset, and what kind of effort needs to be put in to try to locate that lease document? And that's just one example of many of the things that can happen where effort is required to try to track all this stuff down. Lesson number 2, and this one's titled, "There is no one right way." I will just say that there's a reason that private companies and not-for-profits were given a reprieve and given a 1-year, we'll call it stay of execution. And that primary reason is that public companies truly are still figuring it out. I think we've seen that there are conflicting opinions amongst accounting firms in certain areas. And as a matter of fact, we've seen large accounting firms where the Los Angeles office was recommending a solution and how to handle something differently than, say, the New York office was. And I think public companies are still trying to figure it out. The FASB did not create focus groups for this standard, so there was really not one group of people or one team of knowledgeable people that could be used as reference in order to address certain situations. So what we have found has happened is that many public companies, and the FASB actually agreed with this, and I saw a speaker from the SEC speak to this very issue, said, as long as the application of the guidance is reasonable and consistent with your organization, it would be acceptable to the FASB in applying this standard. Well, reasonable and consistent really is based on what would a reasonable person, that person being an accountant, do. And consistent means you have to apply it throughout your lease portfolio. So if you have a situation that you're dealing with that's common, you can't necessarily just pick and choose which specific leases to apply the guidance in one way versus another. It needs to be consistent without your organization. So, but because we don't have focus groups, company A could be applying the same guidance to their specific situation to this in a different manner that company B, who might be having the same situation, could be applying their guidance. So we're seeing inconsistencies, I think, amongst company. And you'll notice that I'm using the word guidance here. I'm using the word guidance because the codification of this standard, there are no hard and fast rules. So it's basically given to us as a list of guidelines, and it's up to the individual to apply them as they see fit. So there's no one right way. And you need to know that if you're a private company going into this. Lesson number 3, companies must manage the change. And this, for many organizations, is one of the largest struggles I think big companies are facing. Let me give you a story. So our work over the last couple of years has quite literally taken me around the world trying to onboard global lease administration on behalf of our clients and deal with the lease accounting changes. And on one particular trip overseas, and happened to be traveling to Asia, we had been engaged to provide global lease administration services. And when I landed in Asia, I had my presentation ready to go. I was very excited, ready to hit the ground running, ready to work with the team. And I arrived in the first day, and within the first, I'd say even 15 minutes, the leader of that organization, the regional leader, looked at me and was like, "Who are you and why are you here? And what are you doing?" What had wound up happening was they had not notified either their local leadership, much less the local staff people that we were relying upon for information of the role that we were taking and that we were going to be helping them. And it really set not a positive tone, a very negative tone for how the transition was going to need to work. So managing that change and managing the expectations and the communication is really critical as you're going through this process. It's not always on that level because not every company faces the same issue, but it really does point out the need and role to have an executive sponsor that's in charge of kind of leading the charge for adopting and maintaining compliance with this standard. Their goal really as executive sponsor is to answer all of the questions like, why are we doing this? Why do we have to do this? Why are we going through this project? What do you mean we have to change how we submit payments for leases or how we submit the leases themselves? And they also need to be someone that's going to be willing and able and happy to rally the troops and lead the charge and drop the hammer, quite honestly, if that's what it takes at certain times. Because this can be a very long and exhausting process. And as every long and exhausting process and every large project ebbs and flows throughout the life of the project, you're going to have peaks and valleys, which means people are going to wind up getting burned out at certain points, so they're going to get frustrated. And this executive sponsor needs to really be there to prop everybody up. Important thing to notice or to note is that really there is a difference between the adoption process and the adoption project. And the adoption project is where you start, where you're saying, I have to gather all my leases, I need to abstract all my leases, I need to get this data, we need to prepare the initial calculations. And I would encourage you to think beyond that project into what happens, we'll call it day 2. So day 1 is the project and it's our first round of calculations. How do we maintain these calculations and what kind of systemic processes do we need to have in order to maintain compliance so we don't have to go through a project every single year? At the end of the day, really the best executive sponsor is really the new sheriff. And the new sheriff in town with regards to this change is really the CFO. They're the ones that are bottom line responsible for what goes into the financial statements, and they're really in the best position to serve as this executive sponsor. And we've seen that repeatedly. I think in many cases, it's going to be somebody from accounting or finance, be it a controller or the CFO that's really going to be the sponsor of this project. And that leads us to our next lesson. And our next lesson is called, beware of the knowledge gap, or you may have a knowledge gap. And really, this comes down to what we talked to earlier in my introduction about the evolution of lease administration and lease accounting. Lease administration truly has become a function that must be done well. It's no longer something that is a support function that's a bunch of people sitting in a room full of filing cabinets just maintaining documents. It's not back office support anymore. And lease administration really has to have accounting skills in their toolbox in order to be able to successfully continue to maintain the data that's coming out of those leases for purposes of supporting this accounting calculation. And for lease administration truly to be done well, we need to understand that there needs to be a collaboration that has to happen. Lease administrators are dependent upon information coming from many different areas that affect their day-to-day being and how they do their job. And lease administration is really more than just lease accounting. They need to collaborate with lease accounting and they need to support lease accounting, but their role is more than just lease accounting. And I think lease administrators need to understand that their role is different from lease accounting and what those differences are. And on the flip side of that, I think that lease accountants also need to understand lease administration. They need to understand lease administration because they need to understand the internal controls that are happening within that lease administration function and whether or not those controls are sufficient enough to allow the dependence upon lease data come the time of the annual audit. And that's really what it comes down to. Lease accountants and lease administration, they have to work together in order to support each other because what we're seeing is that in many cases, lease administration is owning the data. They're abstracting the leases, they're capturing the data in some lease administration system, and lease accounting is taking that data and the calculations from the lease administration software in order to fulfill the needs of the auditors and the financial reporting requirements that they are trying to abide by. And overlaying all of this is the need for critical communication. They need to be able to communicate and collaborate to make sure that they understand the different roles and the push-pull of who needs what in plain English. Because accountants are going to talk in accounting lingo, lease administration has got their own lingo, and the two need to be able to work together. Which leads us to lesson number 5. And lesson number 5, and this is more of a post-adoption or post-project lesson, is centralize where you can. As we talked before, centralizing is critical for maintaining this process on a go-forward basis. And the more diverse your portfolio and the more complicated your portfolio, the more difficult it's going to be able to centralize and globalize. So you really need to start taking a look at a process by process look and evaluate like where you can go and what you can try to co-locate. Trying to centralize for lease administration, especially in a global organization, is a huge undertaking and it requires a massive amount of coordination. There are process changes that are needed from procurement to leasing to lease administration to payments and everything in between. And we find that really the best approach to doing this is to assess on a country by country basis. There are certain things that can be done in certain countries that cannot be done in other countries. For example, it's not uncommon in certain regions in Asia for rent payments to be made by handing over an envelope of cash at the bus stop of near an intersection of a street on the first of the month. Landlord meets you in the corner, you hand him an envelope of cash, and that's how you get your payment. But then when you're trying to centralize and globalize your process, you need to consider how are we capturing this payment? What if the payment's not accurate? If it's paid in the local currency, how can we make sure that we have exchange rates and currency differences and everything accounted for? And you can see it can be a pretty complicated thing. But really start to take a look at these processes. The first one is to try to co-locate all of your lease documents. This is a little more difficult, I think, than anybody really gives it credit for, because your documents could be in 60 different languages, located in 100 different locations around the world. And everybody within an organization needs to have a good idea of how those lease documents come to be and what to do with them, what they're signed. Real estate transactions, relatively easy, because I think real estate traditionally has some sort of a structure built around it and already has process, but that can be a process change as well. Procurement, this one can be tricky because, like I said before, not only are real estate transactions covered under this standard, but equipment as well. And the equipment is typically a much more complicated process to try to get your arms around. Should also take a look at some of the others: lease abstraction, invoice processing, recurring payments, and ad hoc payments. Some of these are easy, some of them are not. It depends on how you're set up. Lease accounting obviously needs to be centralized, because there needs to be like one set of calculations and one number appearing on financial statements. So that one is critical to try to get under wraps, as well as financial reporting. What makes this thing difficult? Well, really, here's some of the complicating factors that you're going to have. The first one is asset types. Asset types are complicating because it could be vehicles, it could be apartments, it could be leased office space. It also could be printers and copiers. It also could be pencils. Not that you would track pencils because they're completely immaterial, but anything and everything that is leased is covered by this. The more asset types you have, and the more complicated leasing is around those asset types, the more difficult this becomes. I will tell you that people struggle with rail cars. Rail car leases, airplane leases are all kind of unique in how they move, and because those assets are mobile and can move from location to location, there needs to be some considerations to process built around that in order to accurately capture that. The other complicating factor is currency and exchange rates. And is it in Chinese yen? Is it in British pounds? Is it in euro? Is it in US dollars, Canadian dollars? All those different currencies, and how you report and when you choose your exchange rate for reporting purposes play into how complicated centralization can be. System integrations are on the list only because, once you build an integration between a lease administration system and your ERP, it pretty much works as intended unless something changes. The challenge with system integrations is we have clients that could have 20 different ERP systems. I think the highest we had was 36 individual instances of ERP systems. And at that point, it becomes a cost-benefit analysis as far as, is it financially and fiscally responsible to integrate each of those 36 individual instances, or are there some countries that we need to or some ERP type systems that we need to process manually? Acquisitions also can be complicated to the extent that the acquisition was not properly integrated into the overall corporate operations. If it's left alone, has its own ERP, pretty much operates itself, you have to figure out how to wrap those transactions into your overall corporate structure. And then we also have local regulations and business customs. This gets tricky. Like I said, in some countries, you're handing an envelope of cash over to your landlord for payment of rent, and that's not unusual. Some of the other unique situations that we've seen is in certain regions of Europe, where lessors have the ability to basically reach into a corporation's bank account, pull out whatever rent that they feel that they're due, and then they submit an invoice after that transaction, and there needs to be a reconciliation. You can usually build some process around that and either make that situation go away or accommodate that type of normal business custom that happens there. The tricky part is that you have to look at the timing between when the lessor is pulling out the funds and when the lessee is actually receiving the statement. In certain cases, we've seen that receipt of statement can be up to 12 to 18 months post-transaction, post-cash transaction. And you need to try to accommodate and make sure that you're capturing all of that activity and it gets reconciled. And then you can also have complications with regards to time zones, languages, and cultural differences. Time zones, if you're doing business in Asia, can actually work to your benefit. We have a situation with a client that has operations in Asia. We are working with an outsourced partner for this client in India, and we also have staff here located domestically that help service this account. And time zone to the client's benefit at this point is because India and Asia are almost a half a day, we'll call it a half a day ahead of us, is that we have the ability to service this client pretty much 24/7. So to the extent that they're working in their local office, and then our support team, our overseas support team is helping them, their days are our nights. So when they do their work during their business day, we can validate and review that work during our business day, which happens to be their overnight. So it becomes a very well integrated process where we've really used that time zone to our benefit. In other cases, time zones can create additional lag. If we didn't have that ability, you're automatically dealing with an 11 to 12 hour time lag, even in the best of situations if you're doing business in that region of the world. And then you also have to consider the cultural differences. And here's another story for you. Again, this happened to be a business trip of mine that we had gone to Europe, and we were onboarding a global client. We're onboarding lease administration services in that region of the world. And we went with a presentation that we had worked with our client to put together that said, look, basically the message is, we're not going to do this to you. We want to do this with you. And we want your input and we want your help. And we want to make sure that we're building process that's going to work for everybody. Usually that's how we would approach this type of situation in the US or in Canada and Mexico and many other areas. But the way that it went over, because of the cultural difference between us and the people we were dealing with, their history culturally is that they want to be told what to do. And the fact that we went into this situation and into this meeting with a team approach gave them the impression that we didn't know what we were doing. Like, what do you mean? You want me to tell you what we want to do? You should know that. You're the consultant. When the fact of the matter is we were trying not to force it upon them and work with them. So that's one area where you really need to try to navigate some of these things that can make your process more complicated. Which leads us to our final lesson. And really, this is the most important lesson at all. If you've not started, don't wait. I'm going to encourage you not to wait at all. This is what you need to do. If you've not gotten started, I would highly suggest that you take a snapshot of this slide, clip art this slide, do what you need to do, or contact us and I'm happy to send you some of this information. You need to get started by creating a team. And as we talked about before, you should include some sort of an executive sponsor. It needs to be multifunctional, include not only areas that you'll need to gather information from in order to actually create calculation, treasury, finance, accounting, financial reporting, real estate procurement, but you also need to include people that might have leased assets in their areas or their functions of a company that you might not consider. Consider HR, housing, cars. Consider marketing and advertising, billboards. Consider transportation or distribution, trailers, rail cars, bins, manufacturing equipment, any kind of distribution equipment within a warehouse, forklifts. All of that can be important assets to try to capture. So try to think outside the box and think of who might have lease assets that need to be included in this function. Also include your auditors. It's important to have touch points with your auditors throughout this adoption process to make sure that they're comfortable with the approach that you're taking and the decisions that you're making. Because otherwise, when it comes to the end of the year and they're doing their audit at the end of your fiscal year, you're going to have a lot of questions to address and a lot of things to answer that could have been answered up front to make that year-end process a little bit easier for you. And then also consider on your team if you're going to need outside resources. Like I said, a lot of effort goes into this. Make sure that you have enough people that are dedicated. To the extent you can, try to get dedicated resources in your organization to devote a vast majority of their time and their energy into adopting the standard and then maintaining it going forward. The second thing that you need to do is create your budget. Budget for time and budget for cost, and then double it. And I say that in jest, but I'm really being sincere in that I would say most budgets have almost doubled on the public side with regards to both the time and the cost of actually implementing this standard. And then consider the need for increased budget to the extent that if you delay adopting or delay this process, and it becomes a case of supply and demand. Like I said before, there's only so many qualified resources that can help you to the extent you need to look outside of your organization. And those resources are going to wind up being more important the longer that you delay. The third thing you need to do is create a good plan. I would highly suggest that you try to leverage a project manager to try to keep everybody on task, to maintain the overall project timeline and keep track of what's going right, what's going wrong, what gets done early, what gets done late, the reasons for delays, because you may need to refer back to that and to have somebody that's good at just juggling dates and responsibilities to help you throughout this entire process. And also when you're creating that plan is you need to anticipate this resource shortage. And I've talked on this topic in a couple of different ways in many different areas throughout this presentation, but really resources will get short given the number of private companies potentially that are adopting. And include both detailed tasks and don't underestimate your time. The time required to do this is I think, way greater, as I've said, than anybody ever anticipated. And then the fourth thing for getting started now is really you need to hit the go pedal. You need to hit the gas pedal. The first thing you need to do is identify your lease population. Truly try to come up with a master list, including serial numbers if you can do it, which is not always feasible, of all of your leased assets. Look to an asset management system if you have one internally. You may need to go back to, if you have fleet leases, like master leases that include all of the different vehicles that you might be leasing. You have to try to create that master list. It's going to be important for you to go through this, to have that list to work against when it comes to trying to gather and locate all your documents, as well as make sure that you have accounting calculations for each one of those assets. One thing that I didn't mention is that this standard also requires asset by asset accounting. So if you have one lease that covers 50 forklifts, you need to be able to remove one forklift from that calculation and make sure that both your system and your process are going to be able to accommodate that need, or go to your auditors and see if there would be some kind of an exception. There are certain circumstances where you can track things by asset class. Number two is start to locate and gather all your lease documents. This, again, real estate, piece of cake, easy peasy. Equipment, not so much. Equipment is really the area where you're probably going to spend a majority of your time when it comes to gathering your leases. And then the third thing that I would encourage you to do, even before you get into the nuts and bolts of doing this, is really try to assess your document quality. And document quality is, A, do I have all my documents? B, if I have a lease that has 6 amendments, do I have amendment number 1, amendment number 2, amendment 3, or is there one missing? Are all of my documents fully executed, meaning there are 2 signatures on them? Am I going to accept documents that have a single signature on them as valid? But assess that quality. Are the scans legible? Are they co-located? And everything that goes into that documentation. And really get started, just jump in. I think the more that you learn and the more that you know, the easier that this process is going to be. So I haven't seen any questions and answers come through yet. If you have questions, feel free to use the Q&A button, and let's get a couple of those posted. That really is kind of the end of the nuts and bolts of our conversation today. I have my contact information up on the slide in front of you. Feel free to shoot me an email, give me a phone call if there's something I can answer for you, if there's a question that you have that's not covered, or if you need additional assistance. So right now I'm going to give us just a few minutes and we'll see what questions. Okay, first question that came through. Isn't it too late for public companies to start this process? Well, I mean, truly, if you're a public company, you need to have been in the process, and at this point, you'll have had to submit some sort of numbers, especially if you're reporting quarterly. You should already be in it. If you haven't started, it's never too late to get started. It could be that your auditors may have given you some advice or done some example or estimated calculations to try to calculate, but you still should go through this effort to make sure that whatever numbers that are appearing on your financial statements are valid and really represent what your true lease liabilities are. Second question that's come in, they're asking, what specifically does ScriptCorps do to help support lease accounting adoption? Really what ScriptCorps does and how we get involved in these projects is all around the data. So we can support our clients in selecting their system to help them track and actually create these calculations. We do a lot of lease abstraction work where we're taking data out of lease documents and populating that lease administration system. We've also helped people with process and procedure development, and we've done everything from that all the way into a full service outsource for those clients that need assistance and help in maintaining this data going forward. Most people in our position, in ScriptCorps' position, most companies won't go as far as actually preparing the calculations. And the reason for that is that there are many decisions that are very subjective in nature that need to be made by companies in adopting and creating these calculations. It is not in a lease document where your cost of cash or cost of financing or interest rates are. It's not for us to determine what exchange rate that you're going to use and when. And we're certainly also not in the position of making any determination whether or not it's reasonable that, or likely whether or not our clients are going to execute options within the lease that can also affect the calculations. But as far as like capturing the data and helping you get there, we're definitely in a position to do this. So that appears to be all the questions that we have now. If you have additional questions, feel free to take down my contact information. I'm happy to follow up with you individually if there's any additional information that we can provide. Thank you very much for joining us today. I appreciate your attention. And like I said, happy to follow up. We will be submitting and hosting additional webinars over the next year. I think the cadence will probably be once every couple of months. If you have topics or specific information that you would like for us to cover in a future webinar, feel free to shoot us an email at events@scriptcorpsglobal.com. Thanks again, and we will talk to you all soon. Have a great day.